Yes, hello. I'm Mark Child, Chairman and CEO of Condor Gold. We have a 2.3 million ounce resource in Nicaragua. It's fully permitted. We bought a mill. We're clearing the site. From day one, we should be a 100,000 ounce gold producer per annum, and then ramping up to 150,000 ounce per annum.
Hello, Mark. Now, we were going to see each other over at the two conferences in the United States, but I couldn't actually make it. I wasn't prepared to do the quarantine component, but you did. And the other thing I wanted to speak to you about was the fact that you'd actually managed to get into Nicaragua. Why did you go there?
Because the asset's there, firstly. And on the way to the conferences, you have to spend 14 days somewhere. So rather than being on a beach in Mexico, visiting the operations made a lot more sense now. So, but it was great to be there. We've got the mill now, which we purchased and spoke about last time, is 80% in the country. And I went to the warehouse and saw it there. I also had a one-on-one meeting with the Minister of Energy and Mines, and he kept me waiting 10 minutes. So I linked my laptop up to a TV monitor in the minister's boardroom and showed him 15-page presentation on photos of the mill coming into the country. And I followed it by a 3D video of the processing plant design around the mill we purchased, which is fully engineered now to an FS level, plus or minus 50% engineering. And you could see him sort of sitting there going, oh, it's really happening. It's in the country and you designed it. And so I had a 3-hour meeting. So that was wonderful to get that one-on-one with the main minister. Then I went to site. We've got 4 drill rigs were running at the time on drilling Mestiza, which we put some drill results out on. And we're doing FS studies on hydrological pump tests, and we're doing some geo-technical drilling, and we're clearing the site. Doing the site preparation and clearance. So, great 2 weeks in Nicaragua.
Yeah, I mean, I liked this story last time we spoke, actually, because I think this story's been, you kind of getting to the final yards, as it were, because you've been telling the same story for a few years to kind of get people to pay attention. And now to get the mill, especially starting to come into country, it becomes real in a way. And that's what kind of intrigued me. You also kept the message quite simple last time around. But, here's the but, you talk a language of feasibility studies and you've just put out a PEA. Is that a step backwards?
Yeah, that's a good question. We have put out a pre-feasibility study, the one before a bankable feasibility study, if you like. Feasibility studies can only have indicated or measured or indicated ounces, which are the higher ounces, and can only have reserves in there. And we're proceeding with a feasibility study on the main Landia pit. We put out a PEA, and some people call that a scoping study, to show what could this be like. Where do we want to be? And that came out with 150,000 ounces of gold per annum for 9 years, which is a nice number to have out there. That's on our mineral inventory at the moment with open pits and underground. If we use $1,700 an ounce gold, that comes up with a net present value of $418 million. I say net because a lot of the Canadians put out pre-tax NPVs, which as an investment banker, your toes will curl over. But it's net of royalties, net of corporation tax, net of the upfront capex number I've mentioned. So that's still a pretty good number to have $418 million if we did that bigger scenario. As I say, and that has a 12-month payback, which is good. We also showed a second scenario where if it was open pit only, we'd have about a $300 million just over NPV. We'd have slightly higher IRRs of 56%, still the same 12-month payback period. So extremely attractive economics from the material that we've currently got. And that's why we wanted to show that. I can talk a little bit more if you'd like.
Well, I wouldn't mind actually. I wouldn't mind actually because PEAs, I should say, is what it could be, right? Not what it should be. So the PFS, moving it up that study curve is really, really important. But I just noticed, we talked last time, the mill was 2,300 tons per day. That's not going to deliver you 150,000 ounces a year, is it?
That's correct. So the mill that we've purchased is a big SAG mill. It's brand new with 18-month warranties, 2,300 tons a day. With a slightly bigger motor, it can be 20% bigger at 2,800 tons a day. So the FS level designs we've done are laid out to double that capacity, both the mill area and all the tanks and leach tanks. And we're clearing that site preparation at the moment. So we're trying to do a minimum capex, maximum cash flow to high grade this. And so on the mill we've purchased, it'll do 2,300 tons a day. Our base case will be 100,000 ounces of gold per annum. And then we add a ball mill, or that takes us up 50% to 150,000. If we get lucky with our drilling and discovery, we double that capacity. Could be a 200,000 ounce production, but we've laid all that out within the studies.
Okay, like I don't mind 100,000 ounces, fine. You know, most companies producing 100,000 ounces are in or around the $500,000 million dollar mark in terms of market cap. So if you get there, that's good news. But you talked to us last time about a stage one approach and a stage two approach. So again, just remind the audience what stage one is. Obviously, I think most of what we've been talking about here. Is there anything else that we've not touched upon? Yeah,
no. Stage one is open pittable. Stage two basically adds the underground in as well. So we have a high grade scenario where we have 4 gram material coming through the open pits. We can comfortably do 100,000 ounces per annum through that. And then out of cash flow, without going back to the markets, we can, because it's high grade and throws off a huge amount of cash, 800 all-in sustaining cash costs, we can finance the underground development out of the operating cash flow, and then also expand the mill by adding a ball mill on to increase that capacity from 2,300 to say 4,000 tons a day in stage two. So we think that's internally fundable.
Right. Okay. So that explains that. So with regards to share prices come off. I think most charts look quite similar to yours at the moment with regards to precious metal. So how's money? Are you going to be able to get through this next phase that you're going through?
We will need to come to the market for cash. We're in that business, unfortunately, where we don't have any revenues at the moment. But we have delivered significantly by de-risking the project. We bought the mill. We're doing an FS study. We're 2/3 of the way through that FS study. So an update on the FS since we last spoke. We have completed the FS designs on the processing plant. We've completed FS designs by bankable feasibilities, FS and the Canadians. On metallurgy, we've completed the site-wide water balance, which is the hydrology. So those are the geo-technical. We've completed 1,800 meters of geotech. We've got one rig. We're going to have to go back and do a little bit more geotechnical drilling, but that's still on track to be delivered in Q1 of next year as we speak today, unless there's some operational difficulty on the ground. But that's looking positive. We're continue to de-risk. We bought pretty much all the land. I mean, 97% or so of the land. The rest is we have prices for it, and we can close it should we want to. So there's no risk on buying the balance of land, in my opinion. I've been saying that for the last 12 months, and we delivered on that. So it's getting to be the site clearance. We've completed the phase one of all the site preparation of 10 hectares. There's a nice photo on our latest PowerPoint presentation showing where that is. We've made significant progress.
You have, but are you disappointed by the reaction to the PEA? You know, do you think it was a case of didn't quite understand why you'd done the PEA, or if the numbers indeed are deliverable? I mean, what was the feedback that you got, certainly when you were in the States at those conferences, for instance?
We put it out on the sort of third day of on the second day of the conference at the Precious Metal Summit in Colorado. The PEA has been well received. I think we did have, if you look a week ago, the Huey Art Gold Bug Index is down 50% from its high 12 months ago. That's the main indice in our sector of the junior producers and explorers. So that's off 50%. They say all ships decline with a declining tide and rise with one to an extent. So we are in a sector that, and if you look at people like Calibre Mining in Nicaragua, their share prices are off 50%. Hochschild in Peru, or FTSE listed, is off 50%. Barrick Gold, biggest gold producer, is off 38%. So, and gold's come off $250. So we're in a sector now where gold is a little bit out of favor. Some redemptions coming in funds within people. So I think it's more sector rather than us. In fact, Condor isn't off halved. It's actually held up relatively well over the last 2-3 months, because I think of the significant progress we've made in de-risking the project and the excellent drill results that we've actually put out. So as a relative performer in the last, say, 3 months, it's been we've held up well. Well, that's not a great consolation to people when they see a share price being weak.
No, but what do you do about it as a management team? Because yes, the market's weak, but it usually means that the money disappears. The money starts to look elsewhere, or just holds it in reserve and waits till some sort of recovery. If you are going to need to get out to market, you either starting conversations or you're in conversations and are aware that people are waiting for something to happen, or do you think it's a case of you're just going to have to resign yourself to raising slightly more expensive money than you'd hoped?
We might have to raise slightly more expensive money than we hoped. We've got positive, strong supportive shareholders, as we've discussed before. The directors have 22% of this, and they're going to continue to be supportive. And Jim Mellon, who you know is an 8.5% shareholder. I'm actually talking from his property at the moment, so we will continue to support.
Is he not allowing you to leave until the share price recovers? What's
No. I think the share price is I can tell you, he's extremely supportive and thinks this is an extremely attractive opportunity to get involved with the company. At our level of small market cap company, say £60 million, the share price to an extent is not dictated by the institutions. It's dictated by retail investors buying and selling their sort of 10 or 20 or 100 grand. It tends to be that way more driven. And at the moment, people are just sitting on their hands. We're seeing gold stabilize right now, I think. It's forming a bit of a base. And I just suggest this is, if you look forward, this is still an attractive proposition. I do think gold will go materially higher over the next 2 to 5 years. Particularly with sort of negative real interest rates and $18 trillion of sovereign debt out there. But that's another story if we start to talk about gold. So I think firstly, people have to take a reasonably positive view on gold. And this is almost an option on the gold price from an investment perspective for many people. And it could quite easily, we see gold go up another $100. This share could be back to 50p in a matter of days.
And with regards to the capex on the PEA, I know it's open pit initially, and I know you've done it say full price, $1,700 per ounce gold. What are we looking at? I know it's a 12 months payback. I just want to get in and remind people of some of the numbers involved here. So to the end, what I want to say is it's not an insurmountable amount of capex that you need to raise.
That's correct. We will, for our stage one, we're looking at a capex of around $100 million. So we're trying to keep it down to a round number, and I'm trying to come in at the moment underneath that. Now, for a PFS, everything has to be brand new numbers. Just bear that in mind. We have sunk costs. We bought the SAG mill for $6.5 million. And just to remind people, half that payment was in shares at 50p versus today's share price of 40p, or around 38, 40p. And that was by First Majestic Silver, a $4 billion company, accepted our shares. And that's a nice validation. We've also bought the land. That's a sunk cost. So we have a number of sunk costs which reduce our capex. We can also from here buy second-hand equipment to keep the capex down. Just bear that in mind. There are, at this stage, when you've got permits, you've got the mill, you've bought the land, you're clearing the site, I can tell you a lot of people are coming along offering gold loans or debt. There are different pocket private equity funds that I met at the conferences, provide debt and equity. So it could be 60-40 debt to equity split. I recently hired, in fact, since the 1st of September, since we met, I hired the former CEO of Calibre Mining that has 2 big commercial mines in Nicaragua producing 160,000 ounces. So I now have a full-time CFO, and his mandate over the next 6 months is to look at the different financing options between debt to equity, gold loans. We won't use royalties or streams.
So who's that? Who's that chap?
John Seberg.
Oh, yes. Yeah. Okay. Yeah.
So he's ex Newmont for 12 years, VP at Newmont in IR, and former CFO of Calibre. So that's a nice vote that he should want to come join us. He's studied the company extremely in detail, as you can imagine, for a variety of reasons. He knows Nicaragua well, and as he said to me, I'd rather do business in Nicaragua than anywhere else in Latin America.
Okay, strong words. Very good. Okay, so he's on board. He must think that he's capable of getting this thing funded, whatever the equity debt ratio is. So, but you're some ways away from that. So between now and what period do you think you're going to need to go to? Because I say you may need to raise money at a slightly more expensive rates than you'd hoped, but it's all relative to how quickly you can get this thing into production. That's what people need to believe, that you can get this thing to production. And how quickly that ramp up is. Presumably, I don't know, 3-month optimization process, and then 12 months to get to a point where you're running at an annualized run rate of 100,000. Is that the plan?
Well, in terms of normally when you commission a mill, the first 3 months has a few teething issues before the engineers announce. Commercial gold production, I think is the sort of phrase. So they sign off. And at that stage, we'd be running after 3 months. The next 12 months after that, the target's 100,000 ounces of gold. Just to clarify that the number that we're putting out as a base case for us.
Yeah. Okay. Well, that's what I was getting at. So do you view the money that you may have to raise between now and having to do the debt equity solution with your new CFO, it's all, do you say it's relative, or do you say, well, actually, we're going to try and raise as little as possible there? I mean, how do you look at that? Because again, people looking in are just going, oh man, it's dilutory. How do you see it?
You're right. I think anybody in a share like Condor knows there's going to be dilution around the market because there's no revenues and negative cash flows. So I think that's a given and probably already reflected in our share price. And to some extent, perhaps one of the things that's an uncertainty on our share price is the question of how you're going to finance this. And maybe that's what you're driving at. I can tell you that we will most likely need, or we will need, an interim financing ahead of debt finance coming in. And I mentioned the FS is in Q1 next year. So we're not going to have the upfront CapEx construction financing until Q1 some stage next year. I can't give you the month yet. It just depends how we get on with the studies on the ground, and SRK Consulting in the UK finalise the FS study.
Okay, so it all feels quite near. So what are the things that concern you between now and then?
Well, the gold price, I think everybody would concern. We'd like to see that stabilise and ideally like it to go up, 200 points or so. But operationally, having just been to Nicaragua for a couple of weeks, it's all going very well on the ground. If you like, the ship has sailed. We are going to build a mine here. We've got the mill, and 80% of it's in the country. I've been to the warehouse. I've seen it delivering. I get weekly reports coming in. We're clearing the site. We're doing all the engineering studies. We've hired also a mining engineer from OceanaGold, their long-term mine planner at the Hale project in South Carolina. They're building the team to take this to this next level. There are presidential elections in a month's time in Nicaragua. That's been flagged for 12 months. It's fully for me. It's fully we know the result. President Ortega is going to get re-elected. The good thing.
Why do you say that?
The mining perspective.
How can you say that?
Why do I say that?
Yeah. How can you back it up?
Well, the most diplomatic way of putting that is he's running for a fourth term. And the Sandinista party control most organs of state within Nicaragua, from the military to the police. Lots of people are just going to vote for that party. So I think and one of the things you'll see in the international press is allegations of the lack of free and fair elections. So I think that I'm not saying anything that is not actually out there in the public domain. What I would say is that the current government has been incredibly supportive of mining. I've met the Minister of Energy and Mines for 3 hours. They want to see the project up there. This is a main area of economic activity for them. But I think that the presidency will get re-elected. That shouldn't come as a surprise to anybody.
Okay. No, it's just not everyone understands the economics of South America, and it's sort of interesting. In the light of conversations in Peru and Chile and Ecuador and Nicaragua, it's the same sort of language. But so I say that Nicaragua doesn't seem to have the same issues around socialism.
Exactly. Thank you very much. It is socialist, but with a firm hand at the tiller. Let's say you could go the socialist route down Chile or in Peru, and look what happens to the share price of Hochschild. I mean, their unions go on strike. They want to put taxes on, increase in royalty. A lot of people are questioning whether they want to do business in these parts of the world anymore, and capex is on hold. You're not seeing that with Nicaragua at all. It's being incredibly supportive of mining. Well, if I could just talk to two other things since we last spoke. One is we put some drill results out on the Mestiza project. So this is a high-grade pit of 120,000 ounces at 8 grams. We're putting in 7,800 meters on that. So that's quite a chunk of change of drilling for us. And we've actually only got about 800 meters left. So we put some drill results out 10 days ago. Super high grades. We got 4.1 meters at half an ounce at 15 grams, 40 meters beneath the surface. And 80 meters beneath the surface, we got 3.6 meters at almost an ounce at 29 grams per ton gold. What's the significance of this? It's converting inferred to indicated. And back to your point, where's the mill feed coming from? How do we expand? We're not doing the FS on that small pit. We're doing it on the main Landia pit, which has about...
inferred to indicated, yeah? Is that what you just said?
Yes. That's what we're doing on the Mestiza pit. So, and that should come on our studies. That should give us a gold production of just over 80,000 ounces of gold. And that'll be $130 million of revenue. And about $90 million of EBITDA just coming out of that pit. Why? Because the grade is 5.37 grams per ton. It's super high grade. And that gives you so I'm talking $80 million of cash flow or EBITDA coming out of a single small pit of 80,000 ounces within 100 meters of the surface. So those were great drill results. The market should have gone up 10, 20% on the back of that, our share price. It didn't. That's a status of the gold price coming down and general lack of interest in the sector, which we discussed. And the other thing, but the PFS is on the main pit of Landia, which is 685,000 ounces, of which about 650 is in the indicated category and will be reserves in the PFS, and we're taking that over. So we're financing this off the main pit of Landia open pit, which is much, much bigger. And it's 8 times bigger than Mestiza, but Mestiza has double the grade. That's the point. The main pit's 2.7 grams, which is still very high grade open pit. This is actually 5.3. The second thing to talk to very briefly is Cacao. We've put in drilling on Cacao. That had a strike length of 450 meters and has 60,000 ounces on. We've expanded that to 1,000 meters now. But importantly, as we've drilled down, we've got a whole system there of about 1,000 meters long and 10 meters wide. And the geologists tell me this is a completely preserved epithermal vein system. Now, we've clipped the top of the system. It's in a down-thrown block. The rocks on the surface are called sinter, which shows the top of a boiling zone. But if we're correct on this, we need more drilling. But this could easily be 500,000 or 1 million ounces within that Cacao preserved epithermal vein system. So that's the other part of our strategy, to show we have 5 million ounces, and we've done that. Again, unfortunately, we're delivering at the operational level, but the share price hasn't moved.